Good morning, everybody. Welcome back to Morning Markets, start of the new month, Tuesday, the 1st of September. A couple of things to think about today. The first of which, just looking back over the performance of asset markets in August. We saw continued good performance from equity markets across the globe, really, with good performances across each of the major regional indices. Similar trends to previous months, with growth equities continuing to provide the leadership, and within that, large cap growth equity. So that particularly favoured the US in that regard. But we also did have a good performance from Japan, and that I think is quite an interesting market at this point, and something to continue to observe, with good performance across most of the sectors in Japan over the course of August. Turning to bond markets, probably where there was a more interesting dynamic happening there, where we saw over the course of the month, as the market started to move in the direction that the Federal Reserve would be moving their inflation target from a specific number of 2% to an average of 2%. And that saw bond yields over the course of the month back up in the US. So the yield on the 10-year moving from about 50 basis points at the start of the month to 70 at the end of the month, as the implication of that change in US policy would be that inflation would run higher than that 2% for a considerable period of time, to allow on average that 2% number to be achieved. Where is that most manifest and evident? It's evident in inflation expectations. So if we look back to March of this year, inflation expectations in the US were relatively low, as they were across the globe, at some 60 basis points. If we look today, implied inflation expectations are somewhere closer to 1.8%, so still below the 2%, but a significant move nonetheless from that low point in March of this year. As we go through this week, we will hear from a number of Federal Reserve Board members, and that will give us a further indication, hopefully, as to how they are thinking about this average inflation targeting regime and some of the metrics that they are looking at. It may be, however, that we do have to wait until the FOMC meeting in the middle of the month to get more detail around it. But hopefully over the course in the weeks running up to that, we can get some indication as to how that is being thought about. Looking to the week ahead, there are a number of indicators that will be merit attention, and that comes in the form of the purchasing managers indices that will come out across the globe. We've seen some numbers, flash numbers already come out, but interesting to see. And what are we looking for there? A continuation of the positive trend that we've seen in these numbers over the past number of the months. And indeed, that's to an extent what we're seeing today. We've a number of Asian countries, South Korea, India, and China, reporting PMI data points, and in each of those cases they are showing improvement. But if we just look at two of them in isolation, South Korea, PMI there continues to remain below 50. So for a PMI index, we need a reading above 50 to show expansion. So still showing contraction in the economy, but the rate of change is what's the most important aspect at this point in time. And PMIs in South Korea have increased on the manufacturing side from 40 to 48.5 from 46.9. Apologies there, stumbling over the numbers. But that's the rate of change. So that's an improvement from previous months. So ongoing improvement there. And crucially, within some of the subcomponents that are important to the latter periods, the recovery seems to be more evident in those, so pointing to a better picture moving forward. In China, we have the Casson manufacturing PMI today, which continued to improve from 52.8 to 53.1. So ongoing expansion within the Chinese economy and within that survey, and that was further evidenced by the National Bureau of Statistics PMI data point that came out earlier in the week yesterday, which also pointed to continued positive trend. So there are two large economies and two large and important economies within global trade, global manufacturing, continuing to show that improvement. The other thing that we get during the week is some inflation prints from a number of countries, and that'll be useful to monitor, given that we did see a pick up in inflation in both the UK and the US earlier in the month of August. So be interesting to see if that continues to hold for a number of the other countries. We did get European data yesterday that didn't show that same inflationary impulse, so that's something to continue to monitor. Looking at Asian markets overnight, little change in broad indices, with the exception of Australia, where they seem to be having a bit of a political spat with China. So joining into the sort of the US, the dynamics where the relationship is deteriorated. It's a crucial relationship for Australia, given the magnitude of exports that go to China. So that's something that does merit watching. The Australian equity market weaker today as a result of that. That's it for today. Please join us as we go through the week. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.